Most traders believe the market moves when they see it move. They are wrong. By the time a move becomes obvious, the opportunity is already behind you. What you are watching is not the beginning, it is the aftermath. I learned this the hard way. There was a time I thought speed was my advantage. I chased breakouts, reacted to candles, believed that being early meant being alert. I was neither. I was simply late in a different way. Late to understand that the market does not reveal its intentions openly. It whispers first and only shouts when it no longer matters. Most traders never realize this. They think price is the signal. Price is the result. The real movement begins long before the chart gives you permission to believe it. Smart money does not chase price. It builds positions quietly, patiently, without leaving obvious footprints. Not because it wants to hide, but because it has no reason to reveal itself early. Size cannot move fast. It must move carefully, and that is where the entire game changes. You see a breakout. They see an exit. You see confirmation. You see opportunity. They see distribution. The difference is not intelligence, it is perspective. Most traders are conditioned to react. They wait for signals, indicators, confirmations. They want certainty before they act. But certainty in the market is expensive. By the time you feel safe, the risk has already increased. I used to wait for that feeling, that sense that everything aligned. The trend was clear, the momentum strong, the breakout clean. It felt right. It felt obvious. And that was precisely the problem. The market does not reward what feels obvious. It rewards what requires patience to see. Smart money moves during uncertainty. Retail moves during clarity. That is the divide. When institutions begin accumulating positions, price does not explode. It compresses. It moves sideways. It frustrates. It creates doubt. Because accumulation is not about excitement. It is about transfer. Weak hands give up positions. Strong hands take them quietly. Most traders cannot tolerate this phase. They need movement. They need validation. So they leave. And that is exactly when positioning is happening. I remember watching markets that did nothing for days. Tight ranges. No energy. I thought there was no opportunity there. I was wrong. That was the opportunity. I simply did not understand what I was looking at. The market was not inactive. It was preparing. Smart money does not enter when the move is obvious. It enters when the move is invisible. That is why breakouts often fail the first time. Because they are designed to attract attention, to pull in traders who believe they are catching the start. But the start happened earlier, in silence. Once you understand this, your entire approach begins to shift. You stop chasing strength. You start observing behavior. You begin to ask different questions. Not where is price going, but who is positioned? And who is trapped? Because the market does not move based on price levels alone. It moves based on positioning, on imbalance, on pressure that builds quietly before it releases violently. Look at how price behaves before a strong move. It does not run. It coils, it tightens, it creates confusion. It tests patience. That is not randomness. That is preparation. Most traders interpret that as indecision. It is not indecision. It is intention. But intention is subtle. It does not announce itself. That is why most miss it. They are trained to look for clarity, but clarity is a late signal. By the time the chart becomes clean, the trade becomes crowded, and crowded trades rarely end well. The market moves along the path of maximum pain. That is not a theory. It is observable reality. It seeks out the largest pool of participants and moves against them when they are most vulnerable. If you are entering when everything looks perfect, you are likely standing exactly where the market needs liquidity. That realization changes everything. You stop asking how to predict the market. You start asking how the market manipulates perception, because that is its greatest tool. It shows strength to invite buyers, then reverses. It shows weakness to invite sellers, then rallies, not randomly, but deliberately. Smart money does not need to trick you personally. It only needs to create conditions where the majority acts predictably. And the majority always does. Fear and greed are not weaknesses of a few. They are constants of many. And the market feeds on that consistency. I have seen traders study patterns endlessly. Indicators layered upon indicators, strategies built on strategies. Yet they all fail for the same reason. They are reacting to what is visible. instead of understanding what caused it. Price is the last thing to move, not the first. Once you accept that, you begin to slow down. You stop needing to act on every move. You start waiting for context, for behavior that suggests positioning, not reaction. You learn to sit through silence without discomfort. That alone separates you from most. Because patience is not just waiting, it is understanding what is worth waiting for. When smart money accumulates, it leaves subtle signs, not signals you can automate, but behaviors you can recognize. Repeated rejections at the same level, controlled pullbacks, lack of follow through in one direction. These are not coincidences. They are footprints, faint but consistent. You do not need to predict the entire move. You only need to recognize when the conditions are no longer random. And that requires discipline. Discipline to ignore noise. Discipline to avoid impulsive entries. Discipline to accept that most of the time there is nothing to do. That last part is the hardest. Most traders equate action with progress. It is not. In this business, action without clarity is loss in disguise. I spent years learning that lesson. I thought effort meant results, that if I watched closely enough, reacted quickly enough, I would stay ahead. But the market does not reward effort. It rewards restraint. The less I did, the more I understood. The more I understood, the less I needed to do. That is when things began to change. You begin to realize that the market is not chaotic. It is structured. But the structure is not always obvious. It reveals itself only to those willing to observe without interference. When you stop forcing trades, you start seeing setups. When you stop chasing moves, you start catching them earlier. Not because you are faster, but because you are quieter. And that is where the real edge lies. Smart money does not rush. It positions. Smart traders do not react. They align. There is a difference. One is emotional. The other is deliberate. If you want to move W, if the market instead of against it, you must accept a difficult truth. You will rarely feel comfortable at the right moment. The right moment often feels uncertain, incomplete, even boring. That is because it has not yet become obvious, and that is precisely why it works. By the time it feels exciting, it is no longer yours. So you learn to trust process over feeling, structure over impulse, patience over urgency. You stop trying to see the move when it happens. You start recognizing it before it becomes visible. Not perfectly, not always, but consistently enough. And consistency is all that matters. In the end, the market does not hide from you. It simply does not reveal itself to those who are looking in the wrong place. Most are watching price. Few are watching behavior. That is the difference between reacting and understanding. Smart money moves first, quietly, without permission, without attention, and by the time you see it clearly, it is already gone. Your task is not to chase it. Your task is to recognize where it has already been, because the market always leaves a trace. Only the patient learn how to read it. If you stay in this game long enough, you begin to notice something unsettling. The market does not just move. It waits. It waits for participation. It waits for conviction. It waits until enough traders believe in one direction, and then it moves the other way. I did not understand this at first. I thought losses came from bad entries, poor timing, weak analysis. But over time, a different pattern revealed itself. My worst trades had one thing in common. They felt right, not just slightly right, but overwhelmingly convincing. Everything aligned. The trend was clear. The breakout was clean. The sentiment agreed. And then, without hesitation, the market turned against me. That is when I began to understand the second layer of the game. Smart money does not only move before you, it positions against you. Not you personally, but the behavior you represent. Because retail traders behave in patterns, predictable ones. They buy breakouts after confirmation. They sell breakdowns after fear sets in. They place stops where it feels logical, and therefore visible. And the market sees all of it. It does not need to guess where you will act. It knows. That knowledge is where the trap is built. Consider this carefully. A breakout above resistance attracts buyers. That is expected. But those buyers also place their stop losses below that same level. Now there is liquidity sitting just beneath the surface. Smart money does not chase the breakout. It allows the breakout to happen, then pulls price back into those stops. Not because the breakout was false, but because liquidity was required. This is the part most traders refuse to accept. The market is not built to move in a straight line. It is built to move through people. Every move requires fuel, and that fuel comes from orders, from stops, from emotions. If there are not enough orders in one direction, the market will create them. That is why you see sudden spikes against the trend, sharp moves that seem irrational, reversals that appear to invalidate everything you believed. They are not random. They are engineered to complete the move, not start it. I learned to stop asking, why did the market do that? And started asking, who was forced to act here? Because every sharp movement is a reaction. Someone was trapped, someone was wrong, someone was liquidated. And that reaction becomes the continuation. This is where patience becomes more than a virtue. It becomes a weapon. Most traders cannot wait through discomfort. They need action. They need validation. They need to feel involved. So they enter early, or they enter late. But rarely do they enter correctly, because correct entry is uncomfortable. It requires you to wait for the trap, not the move. Let that settle. You are not trading the breakout. You are trading what happens after the breakout fails to behave as expected. That subtle difference changes everything. When price breaks a level and continues cleanly, there is little opportunity left. But when it breaks and hesitates and pulls back, that is where the story begins. Watch how price behaves after it takes liquidity. Does it return quickly to the original direction? Does it reject the area it just swept? Does momentum shift quietly without excitement? These are not signals in the traditional sense. They are behaviors, and behavior is far more reliable than any indicator. I remember sitting through trades where nothing happened for hours. Price would move slightly against me, then stall. No confirmation, no explosion. The old version of me would have exited. The disciplined version waited, because I understood something most overlook. Strong moves do not always start with strength. They often begin with hesitation. That hesitation is not weakness. It is absorption. Smart money is not reacting to price. It is building within it. That is why the cleanest moves often come after the messiest conditions. Confusion clears the path. Certainty crowds it. If you begin to recognize this, your entire relationship with the market shifts. You stop fearing pullbacks. You stop chasing candles. Why? Start reading reactions. And slowly, almost without noticing, you detach from the crowd. Because the crowd is always in a hurry. They want the move now. They want clarity now. They want results. The market does not operate on their timeline. It never has. It stretches time when traders are impatient and compresses it when they are unprepared. That is why the biggest moves feel sudden. But they were never sudden. They were built slowly in places most traders ignored. Another truth becomes clear as you go deeper. Not every move is worth trading. This is where most fail, even after understanding everything I have said. They see manipulation everywhere. They see traps in every candle. They begin to overthink, to hesitate, to second guess. That is another trap, a quieter one. Understanding the market does not mean trading constantly. It means trading selectively. There will be long stretches where nothing aligns, no clear positioning, no clean liquidity sweep, no structure worth risking capital on. Those are not wasted days. They are necessary, because capital is not only lost through bad trades, it is lost through unnecessary ones. I have seen traders destroy months of progress in a single afternoon, simply because they could not sit still. Discipline is not tested in action. It is tested in stillness. The ability to do nothing while everything in you demands otherwise. That is where control is built. And without control, no strategy survives. As you refine this approach, something else begins to happen. You stop needing confirmation from others. No more checking opinions. No more searching for agreement. No more relying on noise. Because you understand that clarity does not come from more information. It comes from better observation. You begin to trust what you see, not because you are always right, but because you are consistent in how you see it. That consists. Tendency is your edge, not prediction, not perfection. Consistency, smart money, is not always right either, but it is patient. It is calculated. It is aligned with its own process. And that is enough. If you can do the same, even imperfectly, you will last longer than most. And in this business, longevity is everything. Because the market does not reward brilliance. It rewards endurance. It rewards those who can remain disciplined through boredom, composed through success. There will be trades you miss, moves you misread, opportunities that slip through your hands. That is part of the process. But if you stay aligned with how the market truly operates, not how it appears on the surface, you will begin to see something most never do. The illusion fades. What once looked random begins to feel structured. What once felt chaotic begins to make sense. Not perfectly, never perfectly, but clearly enough. And that clarity is all you need. Because in the end, you are not trying to outsmart the market. You are trying to stop being misled by it. Smart money does not need to be followed blindly. It only needs to be understood. And once you understand how it moves, how it builds, how it traps, you stop reacting to price and start moving with intention. That is where control begins. There comes a point in every trader's journey where the need to chase disappears, not because the market has changed, but because you have. You no longer feel the urgency to act on every move. You no longer mistake motion for opportunity. You begin to understand that the market has always been speaking. You were simply listening at the wrong time. Smart money never announces itself. It does not rush. It does not seek attention. It moves quietly, builds patiently, and leaves only subtle traces behind. And those traces are enough. Enough for the trader who has learned to observe, V instead of react. Enough for the one who no longer needs certainty to take a position. Enough for the one who understands that the best opportunities rarely look obvious. This is where discipline turns into clarity. You stop fighting the market. You stop trying to predict every turn. You begin to align with what is already unfolding, not what you hope will happen. There is a quiet confidence that comes with this. Not arrogance, not certainty, but control. The kind of control that allows you to step aside when nothing is there, and step in without hesitation when everything aligns. Because in the end, trading is not about finding more. It is about seeing better, seeing beyond the noise, beyond the emotion, beyond the illusion that the market is random. It is not random. It is deliberate, structured, patient, just like those who succeed within it. If you remember nothing else, remember this. The market does not move when you see it. It moves when you are not looking for it. And by the time it becomes clear to everyone, it no longer belongs to you. So stop chasing clarity. Learn to recognize intention in silence. Learn to trust structure over impulse. Learn to wait without doubt, without pressure, without fear. Because the trader who learns to do that is no longer trading the market. He is moving with it.